that guy reaching out saying, I don't know what to trade. Like, what should I focus on? And the thing is, I think it's my fault because I sent the guy too many things to work on before, like too many advice, too many articles and stuff like that. So he was kind of confused. Awesome, we have some lights. That's powerful. Cool. Oh, Israel, Jared Arrow. Nice. What's up, Alex? Welcome. I think Alex, you've been here a couple of times, I think. Cool. Nice. Awesome. There we go. So there's this concept, and it's not me who invented it in trading, and it's the fact that your trading strategies are not to be there like all the time. And sometimes people think they hear you have to be consistent with your strategy. So you have to pick a strategy, trade it forever, and make money or not make money, like win or fail. And it's not really the way it goes. The way I like to see strategies every time I trade is I see them as like my employees, okay? And that's kind of funny because just 2 days ago I was talking with someone to hire like an employee, kind of an employee, but to do the editing and to put the show note for the podcast, because that takes a lot of time. So the thing is, when you think about an employee, what's up, Henry? Nice, from the Philippines. The thing is, when you think about an employee, right, you're never gonna say, okay, so I'm gonna pick this employee. It's gonna work for me forever, and I'm gonna pay him like no matter what, and no matter what happens, like I'm either gonna fail, so I'm gonna give him all my money, and I'm gonna lose, or I'll just like adapt and tweak and maybe change employee if it doesn't work. And the same goes with your trading strategy. You don't pick a strategy and you say, okay, so I'm gonna trade this. If it makes money, good. If it doesn't make money, I'm failing. No, it's like your employee. So you can readjust. If you see that this is performing bad over time, like change it, do something, right? Readjust and fire this employee. Put him like at the door and say, I don't want you to work for me anymore. You're not making money. And instead bring a new strategy you create or like a tweak things you change and trade that thing instead. Like your employees are going to do their things, and it doesn't mean that they're going to be profitable from the start, right? So, and same thing goes with the fact that you have to train them. They're not going to be there like all day and working and being profitable themselves, right? The first employee, every time you hire an employee, he's going to make like maybe mistakes. It's going to be like not super like, well, maybe it's going to be good, but he's still going to make mistakes. He's not going to perform like you expected him to perform. And that's fine. That's part of the game. That's part of the first things that happens whenever you hire someone or you have a new strategy. And what's up, NTV game? From your bedroom. Awesome. Yeah. Like 2 a.m. something, 4 a.m. Yeah. Cool, in Europe. So that's the thing, right? Think of your trading strategies as your employees. You can hire them, you can fire them, you can tweak them, you can train them, you can evaluate how they perform and adjust, right? They're not like fixed. They're not things that you're going to do like forever. And that's a much better way to think about them. Because number one, you're not going to be affected by, oh, so I took a bad trade, like it's my fault, okay? Or this trade, well, more like this. This trade was a losing trade, it's just my fault. No, like if your employee lose money, it's not your fault. It's his fault, kind of. Unless you do something wrong yourself. Unless you give them the bad direction, the bad things to do. But if you see it as this is your employee, he's doing his thing, he might lose money over time. Or he might like make you money. And based on that, you will readjust. It's not like a forever thing that is always going to be there. Okay? So that's really, really important. Yeah. Exactly. A lot of companies, they hire people with experience. But even then, right? Even then, you cannot say, well, okay, this guy as experience is going to be the perfect employee for me. Like, no. Like, maybe there's going to be a personality thing. It's not going to work for you. Maybe it's going to be different, or it's going to act differently, or it's not going to be good for the task. And that is why, like in trading, we tend so much to look for kind of the confidence or the like trust in the backtesting, right? We do backtesting, we test stuff, but can you really do that with an employee? Like, no, not really, right? The only possibility you have is to like put him on the job. And if then maybe it's going to screw up. Maybe it's going to make you lose money a little bit. But at least you're going to be able to evaluate after. So if you see a strategy like this, yes, like maybe you've backtested something for a long time. You've been trading it live for just a few days. And you don't really know whether it's going to make money or not. Well, instead of saying, like, I'm stressed, is this going to make money? I mean, am I going to be able to make it in trading? Am I going to be profitable with this strategy? Instead of thinking that way, why would you not think instead of, well, this is like my employee. I'm putting him like on the job. I'm gonna just execute, tell him what to do, which is execute his trade, and he's gonna do whatever he has to do. And if I lose money over time, forget this. Like, I'm just gonna fire him, and I'm gonna pick someone else. Right? That's simple. But if you see it with this mindset of being able to reevaluate on things that happen, on things that like on what your employee does, then you're much more detached, first of all, because you don't see your employees' mistakes or your employees' P&L as yourself. And at the same time, you kind of the manager at the back. Like you kind of like here, and your employee is going to be at the computer, at the screen to trade. I guess that's a very different thing. So if you guys have any question about this, let me know. But I do think, let's see, back to student employee. Yeah. Exactly. Yeah, you can still fail. And speaking of employee, let's say you have multiple strategies. How do you determine it's to be a good return? Yeah, okay. That's a good question, Alex. I like it. Over 30 trades. Yeah. Well, okay, yeah. So basically, like, it's not rocket science. How do you figure out what strategies work best or which employee you want to keep? At the end of like every, like, you're going to pick a year or so, like, whatever. You're going to pick a number of trades. At the end of 20 trades, okay, you have this employee A, which is like your strategy number A. Strategy A or strategy number 1 is producing, I don't know, 5% over 20 trades. Strategy number B is producing 10% over 20 trades. Which one are you going to keep? Are you going to do like the like what a stupid person would do, which is like putting away strategy B, which is making more money, more return, to favor the strategy A? Like, no, of course, right? You're going to favor the ones that perform better. And if something loses money, you just throw it out, put it away, right? That's simple. But to do this, you need to have a certain number of trades, because you cannot say, well, okay, I traded a week, so this one is not making money. No, like, it happens that you're going to have a losing week. So that's why you want to pick a number of trades, like 20, 30, 40, 50, 100 if you need, if you really want to like push this far. But other than that, you pick that, reevaluate, and you decide, well, based on like this, and it's not like rocket science, as I said, based on this, should I keep this guy or fire this guy? And should I put more capital on this guy because he's doing good progress, like everything? Or should I just stay the same? Maybe it's going to be stay the same, right? It's possible. But the thing is, even if you put more capital on one strategy, it's not the end of the world if it goes bad after, right? Because then 20 trades after that, which is like 40 trades in the future, you're going to reevaluate again. Okay, so last time I increased this guy, like this strategy had, I don't know, like 1.5 the original trade size. Is it worth it? Like, did it produce more return? Or should I increase it a little bit more? Or should I decrease it a little bit? Right? If you see that you've put more capital and you lose money, why would you give more capital? Why would you like keep putting resources on that employee? Maybe it's just temporary. So maybe you want to decrease it a little bit, see how it performs later on, right? That's just a basic fact. So it's not like a lifetime decision where you say, well, this is my strategy, I'm going to put all in on this. Like this, if this fails, like I'm dead. Or no, like go step by step. And that is how you evaluate. And you want to evaluate every like 30, 20 trades or frequently, so you can go back and see how things go. And based on your adjustment, how things like perform. Yeah, you could trade both, of course. Like, yeah, if both work, and if both of your strategies are kind of different a little bit, so like one is like a breakout strategy, the other one is like a reversal strategy, why not trade both, right? That's simple. Because if they both produce return, they're not gonna be correlated. They're gonna be different. If one is reversal and the other one is breakout, so why not keep both? And when the market breaks out more, you're gonna make more money on one. When it's reversing more, you're gonna make more money on the other one, right? That's basic stuff, also basic thing. You just have to be willing to evaluate and go back every 20 or 40 trades. How long have you been trading? Been trading for 4 years now, I think. Yeah, 4 years. A little bit more than 4 years, actually. 4 years and a half. I think so. Yeah. And strictly, I think you're trying to make a call, which is not going to work because we don't do singles here, and that's not really useful. But anyway, you can try. Any prediction you make at any time is always going to be, guess what, 50% accurate at most. And they did this research with, and this is what like I teach in one of my courses basically, like at the very beginning, because I want people to get that like from the start. Okay, they did a study, and I don't remember exactly when and where, but they picked like the best analysts in the market, like the best people who could, like who could basically predict the market. They knew like what they were doing. They studied everything. They tried to understand like what the market would do in the future, what were the chance of the market doing this, like that. And I think they picked like 6,000 expert, so-called expert, and they came up with a conclusion. Like they asked them to tell, so well, is the market gonna go up first of all, and by how much, or is it gonna go down, and by how much? And I think 48% were kind of in the right direction. The other percentage, like the average, was in the wrong direction, and most of them didn't really get the target. Like maybe a few of them, right? So if you expect predictions to be the thing that are gonna help you trade better, you're doing something wrong. It's pretty simple. Okay, so you don't have any process, and once you have the process, you like completely forget the predictions. And so many times we get asked, like as traders, and I'm sure you've seen this before. I'm sure like some of you guys, like NTV Game and Trader Arrow, if you've been trading for some time, Alex too, and even Malik. I'm sure you've heard like people saying, okay, so where do you think the USD CAD is gonna go? Like, what's the prediction for the dollar, like Canadian dollar or whatever? And you're there, you're like, I don't know. Like, how can I know? Every prediction I make is going to be 50% accurate. So why would I predict where the market go, right? That's simple. And that's what like most people don't realize. But all the people surrounding you who are not trading are going to ask you things like that. And that's a typical thing I see all the time. Yeah, exactly. Return. That's a good one. I like it. NTV Game, cool. People have asked me that. Yeah, being able to handle losers. Yeah, of course. Strictly which time frame? Yeah, exactly. And the other thing with the return is like I used to think my return on my strategy, like the thing I make every month, was like really really important. Like was the thing that would make me a great trader or a bad trader. And then that was like a few years ago. And then I went on this podcast episode with Alvin Eng, and I don't know how to pronounce the name, but basically what he says is he said like if you have a return that's consistent and like you can handle your drawdown right now. So let's like pick an example. You make 2% per month, and let's say the most you've lost in a month is 0.5%. Okay, and I think that's kind of basic, but instead of having like that return per month, why wouldn't you not risk like double, and you would make double, right? Instead of making 2%, you would make 4, right? Or you can increase your position size all the time, and that's something that people don't understand really. If you just readjust your position size like this to make more return, then like there's no limit to make more return. And of course, like you have to respect the risk of ruin and not go too far, because otherwise it's going to be bad for your trading account. But if you can respect that, and if you can increase your position size, you make more money. It's like it's official, simple, right? So there's no reason to really care about how many wins you get, how many losses you get, how many percent you get per month, or how many percent you get per year. It doesn't matter, because no matter what you get, if you have a good kind of we would call that like a good kind of, I don't know how to say, but sort of a reward over risk that is sufficient, that is good enough, then you can increase your position size at all times, and that's going to be good, right? That's going to be an easy way to make more money. But of course, you have to be consistent with it, and you have to respect kind of the rules and how things how things progress. For me, yeah, percentage drawdown, of course. And when you trade for the people, the percentage drawdown is much more important than the return that they get. Like they don't care about if you make 5%, 10% per year or whatever per month. They only care about really the drawdown you get. Like like are you gonna like, do you offer me like to make 30% per year, but have a drawdown of like 20% or 30%, or do you offer me to make 5% per year, like 5% 5%. No, that's stupid. But like 20% per year, and have a drawdown of like, I don't know, 10% maximum. Okay, those are very different things. And for people who are investing and in the business world, the drawdown or the risk is much more important. It's what they think about. Okay. And oh, that's funny. I like it. The other thing, when you make prediction, it's like, well, okay, make a prediction like, this is gonna go up or down. What time frame? Is it gonna be like on a 5-minute move? Is it gonna be like a monthly move where like everything crash forever? Like, who cares? That's too hard. And more than other things. Yeah, of course, exactly. That's yeah. And TV Games saying, if I were to invest in a trader, like give money to a trader, you would want him to make more money than like the risk-free investment, or at least. And I don't think like risk-free. No, I think more than the S&P probably. Right, more than what the S&P makes on average, which is like, I don't know, 8% or 9% per year. Because otherwise, like, why not buy the S&P index and leave it there and not have to worry about having a trader trading for you? Like, that's simple. I think that's pretty common sense. So, and that's why I said like 5% per year, people will be happy. Well, no, they're not gonna be happy because 5% is lower than the S&P, like what the S&P does in general, right? Oh, cool, Ray, a bit late. No worries. So you can catch the replay after that. Totally fine. Yeah. Yeah, because risk-free is like risking nothing. So no, I don't think you can make much more money risking nothing. Hence why you wanna like. And the other thing is that with the S&P, right? As a trader, you're able to go long and short if you trade currencies and if you trade like if you know how to do it, right? You could go long and short. And the guy who buys S&P at the beginning of the year, the only thing he can do is he can go long, and he can maybe like get out, get back in, get out, get back in. But you should be able to make like more return than him, right? Because you can go long and short, and that's something that you have to remind yourself sometimes. Because why would like if you're able to do both position, and I understand this can be like good and bad because you're able to take more position and get more wrong. But if you're able to go long and short, you should be able to catch more of the move than the guy long at the beginning of the year and doing nothing, right? That's a basic fact. But if you don't do that, it's time to go back and reevaluate and think about what you're doing, whether your strategy really works. Alex saying, just a quick question regarding stop losses. Do you look to reduce risk when possible, or you have a set stop loss and take target and take profit? Well, that's a good question. Basically, do you once you've entered the trade, do you look to cut your losses as soon as possible, or do you stay in the trade like and have your fixed take profit stop loss from the beginning? I think that's the question. Well, basically, there's two ways of dealing with that. Okay. The thing is, when you move your stop loss, your chances to be like stopped out at break even. Like, let's say you move your stop loss to break even when you're at 1-to-1 reward to risk or 2-to-1. There's chances that the market's gonna pull back, hit your stop loss, your new stop loss, and you're gonna like have to get out. Right? You're gonna be stopped out. So that's kind of a risk. At the same time, you have less losses, which is not really which is still good. So depending on how you are, if you take a long-term trade, sometimes you feel like you want to put your stop loss closer to break even just because you want to be safe, right? But is that really like, it depends on your personality. And what I've been experiencing with is less and less to move my stop loss to break even, because I know that whenever I do this, my chances to have less return are increased, because it's really often that price going to pull back, hit the stop loss. And like, yes, you could like move your stop loss based on the uncertain criteria in the market, like only when it's a trend or only when this and this happens. But it gets a little bit confusing and tough to like move at the right time. And it can be a challenge when you don't know, when you cannot identify right if it's trend or like something else, right? So that could be a challenge. But ideally, like, I prefer to leave my stop loss to the original position, because if I'm opening a trade, I'm comfortable with the risk. Okay, and that goes with the idea that your winning trade should be much bigger than your losing trade, so that you do not risk, so that you do not feel bad if you have a losing trade, right? So, but up to you, of course. If you are new with the strategy, I would say maybe like you want to put yourself plus to break even, because in that way, like it's less like you just feel a little bit better, and you might focus like some people when they enter a trade, they do not want to enter any other trade because they feel it's too risky or they feel bad. But if you have if you move yourself plus to break even, then like you feel much more stress free, like much stress free. You don't have any like there's no stress because the worst thing happening is you're gonna get stopped out, and if you took partial profit, you're gonna have some profit in your bank account, but it's gonna be a small profit. Just keep that in mind. But overall, like I prefer to keep my stop loss to the original size and just exit my trade partially. So it kind of decreases risk, but at the same time, it's not like as worse as moving a stop loss. So you've been helping me. Yeah, cool. NTV Game. Yeah, we'll have to do a video about that. I've been helping NTV Game with his trading, and he's back to a strategy with the Bonk Band, which is interesting. It's a very simple thing that I share on the channel as well, so you guys can check out those videos. But it's been making 3.5% so far, which is good. Like depending on how much you risk and everything. I think, and we'll talk about that. We'll do a video on that topic with NTV Game. But the thing is, he's had a strategy with a 1-to-1 reward to risk before, and then moved to I think 2.5 to 1, which is a big jump. And with this kind of different approach, whenever you have a losing trade, it doesn't feel much painful because you know that like at least 30, well, maybe I don't know like what's going to be the win rate overall, but probably 40% of those trades are going to be losers, or maybe 40% are going to be losers, or maybe 60% are going to be losers, between 40 and 60. Okay, so you know that from the start, more trades are going to be losers than winners. So why would you like be afraid when you have a losing trade? I think that's just like basic stuff. But yeah, like if you have a strategy with more reward to risk, you feel better when you have a losing trade because you don't have to like worry that the next trade has to be a winner to recover your losses. I think the matter here is position size. Of course, position size matter a lot. Ray. Yeah. How many lot is best? Theodore, how many lots is best? I don't know. That depends on your account size. If you have it would be stupid if you have a $1,000 account size as opposed to a $100,000 account size. You cannot have the same lot size, right? That's simple. So you calculate the risk of ruin, and there's a full article on this on my blog. I can put the link below or send me a message and I'll send you the article. But basically, the point is that you want to calculate how much you can risk per trade and adjust your position size based on your stop loss and how much you have to risk per trade. Okay, you don't go beyond that because otherwise you risk blowing up your whole account. And is this what you want? No, like it's not what you want unless you want to blow up account, which I don't think is what you want. But that's the topic. I think you've been testing different stop loss placement. Yeah, simplest. Exactly. Yeah. Completely different ballpark. Exactly. Okay, couple of comments. I just want to cover those comments and I'll have to go because it's already I think 30 minutes in. But if you take a win, to take a loser and to win. Yeah, exactly. With what I have right now, yeah. Exactly. And the other special thing is that the winner feel good, right? When you have a high reward and you have many losses in a row, like doesn't matter. You still feel fine because you know you're gonna have your big win over time. And when you get that big winning trade, which is not that big, 2.5. Some people could get 5 to 1, and I tend to get 3 to 1, but with some partial profit. But when you get those trades, they feel good because it's a big win, and they kind of cover all your losses sometimes. Not all the time, but most of the time they're gonna cover like all your past losses, which is interesting. Yeah. Must also understand by increasing risk reward, you decrease the probability of winning trade. Yeah, of course. And Alex, that's why Alex is saying if you increase the reward to risk, of course, like you decrease how many winning trades you're gonna have, and that's a fact. Okay, so that's why you kind of want to test before and understand a little bit like the particularities of your strategy. But most of the time, what I've noticed with my strategy is that when a move happens and we go all the way to 2-1, most of the time we're gonna be able to go all the way to 3-1. Okay, like 90% of the time or 80% of the time, we'll go all the way to 3-1. So why not take that additional reward, like if you can get it, right? So that's kind of a simple tweak you can make, but you have to back this by data, right? That's a fact. And that's why, even if you didn't back this, just trading your strategy right now, journaling your trade, going back to review, is going to help you figure out like how to improve that and whether you can improve in certain ways. Okay? And that's why the review process is much more important than pretty much everything else in trading, and being able to evaluate and back all your decisions with data. Yeah, you can't go over your lot if you don't have enough in your account, of course. Yeah. What about scaling off? Scaling off. Interesting. Yeah. Move size. Exactly. Yeah. And I think NTV Game is making an important point. It's up to the trader, right, to decide what to do. Like, do you prefer to take partial profit? Do you prefer to have your stop loss to move to break even? Do you want to just enter once and exit at your full like take profit? I don't know. Up to you. This like see what you're comfortable with. And I realize for myself, I'm trading much better when I take partial profit. Okay, that's a fact. So why would I go against this? Why would I do something like stupid and like have this huge take profit and just wait and be stressed for it, right? That's the fact. So you go with what you're comfortable with. And if over time you see that things change, you're more comfortable waiting for your trades, or you see with data that you could go further, well, just like change, right? You're not like a plant. You can change over time, which is really the powerful thing with trading. Even if you do things bad right now, like your employee, even if they're bad today, they can become better like over time. And you can train them to become better. Okay? Yeah, don't stress over trade, exactly. Cool, Alex. I'm pretty glad that it's been beneficial. I appreciate it a lot. Please, guys, give a like to the video if you liked it today, if you enjoyed. And that kind of helps me know what to target and what to give you guys in the future. And I want to make sure that those videos are useful and that you get some value out of them. So I wouldn't be here if you didn't get value and if you didn't like, care about those videos. Hence why I like to do those live and help you guys. Yeah, exactly. So I think I'll finish it here today. Thanks, guys, for watching. I appreciate it a lot. If you want to leave a comment or have a question afterward, just leave it below. And if you want to see the link to the article about trading strategies and the risk of ruin and everything, send me a message or contact me on Facebook and I'll send you the link. It's going to be posted, I think, below also, but might take some time. And I'll see you guys tomorrow. Ciao.